Welcome everyone. How we doing? What's going on, Ricky? Good to see you. R, good to see you, R. You were here last time, I remember that. Lambo's always here. What did everybody do today? Another pretty interesting one. George, what's happening? That's always a good day. Not me. Yeah, that's perfect, George. That's all you needed. I had a rocky start. Great finish though. Swung some AT&T. We're gonna see how much I regret that tomorrow. Swung a dead apple call too. Yeah, apple got me 2 times technically. And that thing was looking good. I should talk about that one today. Remember exactly where we ended then. Swung some Googles, huh? Yeah, we got an FB tomorrow, so everything's kind of a lotto overnight. Oh, wow, yeah, sick one. Yeah, thanks, Ricky. I want to talk about this one later. Oh, the reason, yeah, I mean, I can tell you why SPY dropped. It's not even a guess. This was a Fed speaker saying that inflation fears are still very real, and just because they've been postponed for a couple of weeks, that doesn't mean that they're gone. And then, at the current time, they don't feel like they should be cutting rates, and they're likely going to continue to hold. And so this was the Fed speaker. This was nothing technical, anything, like that. And then said a couple more positive things. And you buy this dip. We bought this dip and voice chat today. It's a nice one. Paper handed them, man. I was out of those things like right here. They were insanity by the end of the day. Nice. I saw stuff. I was getting smoked the other day. Oh, nope, that was today. I mean, I still like it. I don't really start to even get worried about SoFi until down here. It's getting about to that point where it's probably going to take the bounce too if it even sells more. Yeah, somewhere down in here. Yeah, it was crazy. I know that job today was a wild one. Got to be honest, there wasn't a lot of reason, in my opinion. Maybe we can talk about SPY when we get into price action today. But no, there wasn't a lot of reason to be short here, but I was happy that a few people got to sneak in there and catch that. That was pretty sweet. I don't know if they just kind of lucked out, or if they just happened to want to be short into the Fed speaker. But yeah, it was a sick hit for a few people I know that were in there. I wasn't. Thankfully, I was in no trades, because I'll tell you what, buying the dip off that 604.95 had worked so many times today that, we were coming back down to it. Had I been, I don't think I was trading at this point. Had I been trading at this point, oh man, I definitely would have been smoked, because I would have been long. Welcome everybody. We'll give it just a few more minutes here. Let a couple more people show up. It was quite the dip by there, Lambos. It's a funny one. Getting up into the tricky zone though. We'll see what happens up here. Tricky little zone. It is funny how perfectly they use this trend every time. I mean, this is definitely a chart that shows, a bit of lack of confidence. Like you get these big old spikes anytime there's big selling going on, and then all the buys are just trickling down in that volume. But it's fun, I mean, that's like, you and I even talked about this in DM the other day, Lambos, that everybody hates low volume, and that's just dumb because you can get moves like this on low volume, or even, yesterday, such a low volume day, just grind us all day, dollars up, I mean, low volume is very good for the market moving. You can have some choppy days here and there, but even look at this one. I mean, you got $5 up. What more can you really ask for, yeah, and I mean, Lambos, you're right. They do bid. They just don't bid very many times, I mean, and you always want to, if you can, think about it from, the big money or the hedge funds point of view on these things. And uh uh if they get a grind, spy up $5 and do it on like, 15 million volume until that volume comes in, the last hour of the day. But they do most of the grind in that, in the bulk of the day is what they've been doing, and so they get to do that for like no money and make a bunch of money on the way up, and so algos love this kind of trading. But it is, these types of things are to me, you know, they're still the more like worrisome things, the buybacks are, they're nice, but they're grinds. The dumps are just like when we get a dump, we clobber, I mean, we just like, and I know all of these recent sells have been news, but like when you grind all day and get clobbered on news, and like the sells, when you just look at the chart, they're definitely going a little bit more aggressive on the sells than they are on the buys still. The future's just like ripping right now. Yeah, kind of. Spy made it look better. Welcome everybody. We'll get this. I got to do one thing, and then we'll get this thing rolling. Okay, welcome everybody. Happy to have you here, Dirty River. Tonight is kind of a little bit different of a class just because we had I think last or no 2 weeks, because I did those classes with Toasty last week. 2 weeks ago, we were doing building a trade plan. We talked a lot about scalping and day trading. That's obviously what most people focus on. And then I want to talk about swing trading tonight. I swing trade. I don't want to say different, but a little bit different than a lot of the people in OOT swing trade. I look for a few different things. So we're going to talk about, the types of setups I like to look for, reasons that I might take an entry somewhere, you know, and why I enter in those places. And then we're going to talk about, because there's always a few different setups that I look for if I'm willing to take the swing trade. So we're going to talk a little bit about those, the different ones that I like to look for. And then after that, we're going to get into price action. And so I don't know, maybe 3 weeks ago now, we did a price action lecture and people just seem to really, really enjoy it. I obviously love talking about it. I love looking at charts. That's why, I know some people don't like to sit and look at charts every day. They want to get in and get out, or maybe some people don't have time to sit and look at charts. But I love sitting and looking at the charts. I love watching the charts move, whether I'm in a trade or not. Spy's been, Spy has been that really great example lately. Even if you aren't in a trade, it's pretty fun to just watch the knife or the market just like knife out of nowhere. I have fun watching the charts. And so we'll be talking price action. People obviously really like that. More and more people, it makes me happy, I think, are starting to focus a bit more on price action. One of the huge issues that traders have is, they'll have a bias, like, I mean, like me, I hate Tesla. Like I always want to short Tesla, even if it's a terrible idea. I don't always do it, but we'll have those biases, and those are fine to have, but you can't let them affect how you are reading the charts. That's, a prime example is like, you can be super bullish, you guys all know I'm pretty dang bullish all the time. That doesn't mean that I can't just, buy, like that I won't like ever trade puts or scalp puts or anything like that. Just because I'm bullish, you can't let that affect how you trade. You know, if the market's dumping, you have to trade the market dumping. Of course, you can try to catch a bounce if you want, but you have to trade what the chart is telling you. And so that's what price action is. As most of you guys know, I love Al Brooks. A lot of what I talk about is just stuff that I've learned from him. So that's going to be the second part of the lecture. Obviously, tonight we're starting with swing trading and things that I like to look for. So again, thanks everybody for being here, and let's get to it. So swing trading it's a really double-edged sword in my opinion, especially how a lot of people like to swing trade because there is, of course, the potential for a bigger reward. However, there's also the potential for a bigger loss. A big part of why, myself and many others, and I don't know if others think of it this way. A lot of people tend to not think about the risks, but I like day trading and I like scalping because at the end of the day, I don't have to worry about what the market's doing or anything. My positions are all going to be closed. I don't have to worry about it. I don't have to, wonder if news is going to come out in the middle of the night. And so there's an inherent risk that goes with swing trading that I think a lot of people don't consider. And so when they don't consider it, they really don't they don't understand the risk that they're putting on in some of these trades. And so for me, when I'm swing trading, I want not only a high probability setup, as many forms of confirmation as we can get, those types of things. But I want to pay for some safety. There's two kinds of swing trading. Yeah, well, there's a bunch of kinds, but there's two main kinds of swing trading. There's the more, I don't want to call them all lottos necessarily, but if you're swinging a weekly, you basically have to view it as a lotto. Even if you're swinging the following week's contracts, you have to understand that there's quite a bit of additional risk on that. One move against you can really hurt you, even if your contract is for a week out. So when you're swing trading, you really have to analyze how much risk you want to put on the trade. And so a big part of that's going to come from contract selection. We've covered that in previous classes, but you should always be analyzing your deltas, your thetas, all of that before you take the trade. Analyzing how quickly do you want it to work. And so again, when you're swing trading, you are putting on additional risk, but the safest way to deal with it is obviously buying more time. Of course, those contracts are going to cost you more money, so the dollar risk might be higher, but when you're fighting little to no theta, on a month out contract or whatever it is, you can pretty well look at the contract, look at the delta, analyze where your stop out is going to be, and then know how much you have at risk. If you got 40 delta and your stop out's $2 below you, you're risking $80 per contract. You know that before you enter the trade. So that's what I want. We're going to talk a little bit about it tonight. Some trades that I took, some trades that I didn't take, some trades that I wish I took. For swing trade setups that I like and how I would have traded them, regarding contract selection, how safe did I want to be, all of that. And so one of the first ones that we're going to talk about is Amazon. Um, as most of you know, I'm super bullish on Amazon. It got absolutely clobbered today, but we're going to go back in time and we're going to talk about this is what we were watching. You can see we had this all fibbed out. This is everything from a lecture, here 2 months ago. I think it was a Sunday scan or something like that. And so Amazon had broken out and then, failed to break out, kind of expected. So then we were still watching it. So when you're swing trading, a very, very important thing is the time frame that you are looking at. If you're trying to enter a swing trade, you have no business being on the 5 or 15 minute, any of that. What goes on intraday should, unless the trade is obviously going really, really against you or really, really in your favor, what goes on intraday should mean nothing to a swing trader. You need to really view the market as where did we open and where did we close? That's what you are most concerned with when you're swing trading. If you aren't only concerned with that, then you're likely in a short expiration where you needed the move to happen a little bit quicker. So this is a trade that I actually I didn't take it. Unfortunately, it's one of those ones that I wish I would have been in there. This is a trade that I would have loved to take, and it's a trade that I would have gone a shorter expiration on. So when I'm planning a swing trade, some of the main things I want to look for, I want to look for any major trends. I want to look for any major levels. Is it fibs? Is it daily levels? Is it just whole psychological numbers? What am I looking for? And so when I see a swing trade, I'm always going to start on the daily. My entry is going to come on a shorter time frame, likely just because it's easier to see, but I'm always going to start on the daily. So Amazon downtrend, we've been watching the downtrend form, for weeks. We've seen a failed breakout. Now we start to say, okay, are we going to bounce and are we going to take this breakout? So we take the big bounce up, then we see this day happen. This is the first day of the breakout. I would never, ever, ever swing long on a candle like this. Does sometimes the breakout continue and you're happy? Sure. And it looks like even this next day we did gap up, a couple of bucks, but ultimately sold it all off. Well, I've been watching this. I want the breakout retest. This to me is like an absolutely perfect setup for a swing trade. And a swing trade that you will expect to have results relatively quickly. So that doesn't mean that I'm going to swing a weekly or anything like that. Definitely going to go on a next week contract. But if I see this type of setup where, we've tried the trend multiple times, we've failed to break out, we're holding the levels that we think we should be holding, and now we're breaking above the trend and pulling back. Well, now I start analyzing the chart even more. I've seen the big picture stuff, holding levels, breaking the trends. Now I want to start to say, okay, what levels are we at? So right here, I can identify a few levels. I got my 218.66, 219.60, and 220. I don't have it marked on the charts, but you don't need to have 220 marked on your charts. Big round psychological number, it's there. So I want to take the entry as close to this trend and basically 220 as I can. I know that, like back here, if we're breaking out, I know that I want the retest close to the trend. And so, and we will go back and look at this day on a shorter time frame. All I know is that I feel comfortable swinging here because I'm going to be looking for the bounce up to 22 or 222.50, which is nice. $2.25 move up. My tight stop is under this trend and under 219.61. If we get back under that, maybe we hold it. I don't care. That's where my stop out is, because then I'm risking less than $1. However, it doesn't mean when we wick under that or anything like that, or maybe we gap down under it and start buying, I'm not stopping out instantly. I am going to say to myself, I'm stopping out on a daily close back under the trend in this level. So, well, yeah, all depends where your gap down comes from. So who knows, maybe you bottom ticket, maybe you get it at 220.50. You're risking $1.10 to the downside for $2.25 to the upside. Or if the market really starts clobbering, then you're looking at right about $2. So terrible situation is if you break under here, now your risk has got bigger than you wanted. As I teach in all of my trade plans, you need to have two stop outs in mind. Main stop out is daily close under this level. That I am exiting this trade because I am wrong and I'm not willing to risk any more is under 218.66. So how I teach that, and a few other people, I call it your perceived risk and your actual risk. So, you can hope that this is going to work, but your actual risk could end up down here, or you're like, oh shit, I got to get out. Risk is down here. But we have enough confirmation here, breaking out. We're having a nice little increase in volume on this way up, decrease in volume on the sell-off. We, of course, don't know the next day yet, but you take your entry into close for the swing trade here, knowing worst case scenario, you have faith in your levels. I have faith in my levels and trend. Worst case scenario, you got about $2 of risk for maybe just over $2 to the upside, 250 to the upside. So this is a trade that I will take every time. You might notice that up here, I won't take this trade. I will very rarely take the first breakout. Obviously, this one crushed underneath it that next day. So if you did try to buy the trend, you got stopped out the same day, as far as I would be stopped out the same day. But I will never buy the first breakout. However, Second breakout, nice volume going on, strong enough support below me, nice enough move to the upside that I'm happy with it. I'm taking this swing trade. This is one where you might have noticed I haven't talked about what happened at the next day. You can't, it doesn't like, this is not normal. Amazon taking the gap up $5 after a big sell day, that's not the normal. So, that is why, I almost didn't talk about this one because of the result was really good. You don't expect that. But your main concern is this entry potentially provides you the least risk of all the other entries. So that's why we take that trade. At least why I would take that trade. Then the only other thing that I ever consider when I'm looking at, when you're looking at specifically something that has sold down, when I'm swing trading, I'm always, well, and I'm pretty much always going to pull up the daily SMAs, but I always want to take note of where these daily SMAs are, and it's going to be one of my main targets for that upside. So as you can see, that SMA was lining up about where we would want it to be lining up, where we would expect the rejection to come. Again, ignore the next day, but this is around where we would expect that rejection to come. So it just gave us that confirmation of, or not confirmation, but a target for the upside. So again, trend break with multiple tests, volume working in my favor. All of those things are something that will, and I love the breakout retest. Obviously, most traders love that. This is the main things that I'm going to look for on for my swing trade on a trend breakout like this. So any questions? Does everybody see, like I said, it's a relatively simple, it's a simple setup, works time and time again. Obviously it can work the other way as well. In bear markets, you can catch some of those things, going the other way, but we just don't happen to be in one right now. What SMAs do I use? I use the 20, 50, and 200. They're the classic simple moving averages. So those are the ones I stick with. Bunch of people watch them. They work over and over again, so I always like to use those, and I always like to take note of where we're trading in relation to them. Okay, so that's kind of the trend breakout retest, obviously a great example that worked well. It's not, ignore that part. Just look at the setup before that part. That's the part that's important there. So next type of swing trade I like is something like this. And this might look, hold on, I see a question. What indicators do I use? You saw it right there. I mean, SMAs, trends, support and resistance, and volume is important to me as well. It's always important to see volume going in the direction that you want it to be going in, sort of deal. Or if it's going against you, you want that volume decreasing. Like if you're long, but we're selling off, you want the volume decreasing on the way down. Do you ever have to move your stop due to theta or time decay? Absolutely. For the exact time that you're talking about. When if you enter a trade and it's a swing trade, and you bought time, of course, theta is not going to affect you a lot unless you're in like a weekly, you're getting clobbered, but the next week's, it's going to hurt a little bit. 3 weeks out, 4 weeks out, you're hardly noticing it. But yes, if you get in a trade, maybe you took the early entry or whatever it is, and you get chopped around for a couple of days where you aren't going too red, but you aren't making enough to sell. So you're just getting a little bit chopped and your contract loses some value. You will have to adjust it because, your stop is still your stop based on the chart. However, because options, decay with time, you're fighting that. So you will have to adjust a stop every once in a while, but the actual position on the chart does not move, like Coca-Cola break a 62.50, that's your stop, no matter what. But it might be a little bit more value of your contract because it eats it away. Yep, I did say the 20, the 50, and the 200. A lot of people actually use the 100 as well, and it's that nice kind of, even some people use the 125, but a lot of people use the 100. It's that nice kind of middle ground between the 50 and the 200, so you can get that additional line. You can see I still have the SMAs pulled up here. But so this right here is another one of my, like, these are actually I like these types of setups for swing trades more than I like the breakout retests or breakouts for swings. I like consolidation swing trading because it's more often than not going to provide the smallest risk for you to take a trade. Your stop out is almost always going to be very tight. You have very defined price targets throughout the range. And then as you get to the top of the range, you obviously mostly exit your position, or if you're lucky, you got the best possible entry for the breakout. So that's why I love, kind of trading consolidation. And so I'm always going to look for something like this on the chart. And then I'm going to identify kind of the candle that began the range. I want to see, where did the range movement start? Of course, you can see we have some pushes out, but I love trading in a range for swing trading for the reasons that, like markets frequently don't break down or break out. They spend a lot of time going sideways. So it's a place where we can really, really use it to our advantage. And you will often have many forms of confirmation with minimal risk to get in a trade. One of the things that does kind of stumble people up with trading ranges, and it's interesting that I like them so much, because I also try to teach people, don't try to catch the bottom, don't try to catch the top. Nobody cares in the long run if you do. But in a range, you are often buying longs on an ugly day for a swing, and you're often buying puts on a really green day for a swing. So there is a little, psychological issues with it, but a setup like this is something that I absolutely love. So we have our range defined. We've kind of touched the lows, then we come up here and touch the highs, are unable to close it. Now I can start to say, I got no interest in being long up here. And, we're watching this play out over a couple days. I got no interest in being long up here. And, but if we sell down to these lows, I have a lot of interest in being long down here, because I know where my stop is. If we're seeing selling below us, we got 30 cents a risk for a, best case scenario, $1.50 move to the upside. It's of course not always going to be that smooth, but when you're analyzing your, most basic risk reward, your stops are at new lows. Even though you got SMA, we'll talk about that as well. Your stops are at new lows, and your target is always highs. That's how you trade in a range. Of course, you have levels through the range, so you want to trim on the way up, but your ideal entry on any sort of range trading is buy low, sell high, or sell high and buy low. It doesn't, ranges are awesome, and I wish more people cared about them, because if you're bullish or bearish, whatever if you prefer trading short or prefer trading long, a range will every few days provide you a trade. So it's always worth it to keep your eyes on them. So on a trade like this, and this is a trade I took, on a trade like this, I had watched this nice range developing. I knew that we had strong support down here, 62.50. I knew we had, had the SMA, the 20 SMA right there. I knew that we had, held this level very well from earlier. I knew we had the 20 SMA down below us. Again, additional support. We have SMAs curling up. We've done a breakout. We've done a retest. We have now began to consolidate. This is a setup that I look for this all day. I also look for this exact same setup intraday, for scalps and day trades as well. Yeah, the breakout, retest into consolidation, buy those lows and look for more move to the upside, or break down, retest, consolidation, look for the move to the downside. Classic trading thing that everybody should really have their eyes out for. And so on something like this, again, you are looking, and you're basically going to be using more intraday price action to determine your entry, because you want to get in when we're down here at these lows. The best possible entry you can get is down here at these lows. You know where your stop is. Daily close outside of the range, you can take the stop. Daily close under this candle, you can take the stop. Or if we're really selling under the SMA, that's where you'll take the emergency stop. But we always want to identify the main places that we want to stop out on the chart. Like I was, saying earlier, what happens all day when we're swing trading doesn't matter. Where do we start and end? That is what really matters to us as swing traders. So again, we buy the dips on days like these. We short the rips on days like these, and look for the move to the upside. Hopefully you get all the way to the top. I obviously didn't. I think I was out like the next morning on the small move up. But look for this type of breakout retest to consolidation, or breakdown retest to consolidation. And it is this is likely my favorite swing trading pattern, whatever you want to call it, plan method that there is. It's just very, very reliable. Even this one was great. Double bottom. You guys know I love those. If you're giving me a double bottom with a bunch of SMAs for support after a breakout, plenty of buying volume around on any of the moves up. I am looking for that nice bounce right there. Or again, if you like to trade short, you can look for the shorts up here. You want to see a day of dying volume at the highs up here and look to short it. But for me, this setup is just too perfect. Yeah, so I chart the daily and then entries on the intraday stuff, Again, here's our range that we've identified. So I bought it. I don't remember. I think I even talked about this little triple bottom. I know it's not quite a triple bottom because this one's technically a higher low, which is what you want to see. This one was just worth that buy, And so I trade intraday on the 5 and 15 minute. I always have longer time frame charts on a different screen, but even for my swing trade entries, I'm going to take this. And then what I don't remember when I entered, to be entirely honest with you, but let's say I entered, over here. Maybe I was like too early on the trade or whatever. So I entered over here. I don't care about any of this. I just want to see us closing above that range. I don't care about this. I don't care what's happening all through here. Maybe if I was up, nice, I probably maybe could have taken a trim there, but that's all you do, you don't care about all the noise. You care about where we end the day. And so on that day, we ended it above the range. That was what we care about. Yeah, exactly. And you guys know I love double tops and bottoms. Ranges are just a bunch of double, triple, quadruple tops and bottoms all together. So I love that trade. And then yeah, Ricky, I'm happy you brought that up because this is a trade I didn't see. So Google. You guys can see my levels on Google, all old levels on Google. Obviously, the extensions never fully ended up being needed with that gap down it took. But we can see on Google, we identified our range way back here. And this is a really perfect example of kind of the same thing. We had Google consolidating for, for months and months. Google did not do a whole lot. It was the slug. Then we get the breakout. So this is kind of the same thing that you're looking for. Big consolidations lead to big breakouts, and then they typically lead to more consolidation. So this is very similar setup that we had, breakouts, consolidations, move up, consolidation, a little move down, some more just in the range trading, give us the breakout. Now we start trading this consolidation. You can see this is the box I had drawn, so I'm not going to change it. It was already on there, so we're just going to leave that one. But this is a perfect example of why ranges are wonderful to trade. And it also shows you what happens when they go wrong. So you can see, range is identified. We'll say basically the range is identified here. So any dips down here are worth a buy. Move up to your levels, and then of course you don't let something like this go red. You're trading in a range, so you can pull down. Again, dips down to the lows, you're rewarded. Well, if you're a short trader and maybe you don't like to buy dips, you prefer short and rips, you look up here, again, double top like we were just talking. This is the exact same setup, but reversed. You get a double top. You know where your stop is. It's a daily close outside of here. And you're targeting the low of the range. Then again, you can buy, you can sell over and over again. And then right here, this is the part that I want to talk about. And you get a C, here is your entry. Obviously, our risk, as we were short entry. Of course, the price action doesn't necessarily tell you to be short here, but we're just going to say you're ignoring that. And, based on what we see here, this is the top of the range. We're short in the top of the range. So you short it here. Well, your planned stop is just a daily close outside of here. Or worst case scenario, you take the stop over this 202.40. This is a day where you can see it gapped up. Maybe maybe you just took that stop out. I wouldn't have, if I'm being honest with you. There's no way I would have taken a stop out on this small of a gap up against me. Well, at some point throughout this day, I likely would have taken the stop out. And you can see ultimately the next day you came back into a little bit of profit. Probably a good amount on the gap down. But this is one where the range failed. And I think it's so important to point this out to people because Nothing is foolproof, you know? So swing trading on a range on something like this is a great example of it failing, you know, where it does sometimes. You can see, you know, maybe you got this one, probably not, but you short this one, works great. Short this one, works great. Long it, long it, long it. All of those work great. Well, eventually it didn't work great. Now, why do I say I might hold this swing trade for a little bit, even with the gap up? I'm going to say to myself, most breakouts fail. Even if it's tried it a bunch, most breakouts fail. So I would be letting it breathe. Let's see, what day was that? I would be letting it breathe a little bit. Um, well, yeah, I mean, okay, so you get blown out right off the open. Um, then you basically got the choice. You either take the stop out right there, because let's be real, it's now moved the better part of $3 against you. I would, as I look at this intraday movement, I would probably take the stop out here. You're going to be down 30% on the contract probably at that point. That's going to be more than I want to risk on a swing trade like this. And then I will look for a better entry. That's it. Maybe it's short, maybe it's long, but I'm just going to exit the trade. If you really want to hold a, over $5 move against you, I wouldn't. I like this trade because that's something that I teach people is just because you have time does not mean that you have to hold the trade. I mean, if a trade is going 30, 40, 50% against you, you don't want to hold that trade. And so that's where I differ from a lot of swing traders. I won't deal with the pain. I will look for a better entry so that I have less money to make back. If your contract's down 50%, it now needs to double. It needs to go up 100% from there to be break even. So, you know, do I hold a contract minus 50% sometimes? Yeah, I got one swinging right now. I'm not happy about it though. It was the way it worked. But if you have the ability to slow down that loss, you slow down that loss, and then you look for a better entry. And so that brings us back to our daily chart. Failure here. So you aren't going to long this. You also probably aren't going to short it because you're going to be traumatized. At least I wouldn't be shorting it. So you're probably not going to short it. So you're going to be saved there. And then you get to see what we did. Big old gap down on earnings, sold us right back down to the bottom of the range, holding an SMA, holding a level. Is there a reason to be cautious because it's 2 days after earnings and we have, more earnings and blah, blah, blah? Of course. However, it has now gone to our extreme and we're in an extreme in a range. We know how we trade it. We buy this dip down here. And so that's what Ricky did, I'm assuming, is he probably pulled out this daily chart. He looked, he said, hey, we have bounced here a lot of times. I'm going to take this trade. Hopefully you bought it early before the rally, I'm going to take this trade on this little pullback here. I know my stop is a close outside of this range, and best case scenario, I'm targeting the top of it. So, don't get me wrong, it's like over $10 away. So you don't necessarily want that far of a target, but $10 away, best case scenario for like $2 to $3 worst case scenario. Uh, Great trade, and then again, oh, he says he got him a little early yesterday. Then again, no big deal here because technically speaking, nothing happened to Google in the last 2 days. If we zoom in on Google, it is again giving us that prime example of we don't care about what goes on in here unless it's going really, really bad or really, really good. We care about what happened here and what happened here. So we see it on the 5-minute chart, nothing happened. We come to Google, we see nothing happened. So we're again at the bottom of the range. We got no reason to exit this trade. We have a bunch of reasons to be in this trade. And so we stick with it. Okay. And so that's it. Those are my favorite setups for swing trades. I was going to talk about one more. What did I have on T? Oh yeah, that T breakout. But this is, yeah, well, that's it. We're going to do price action from here. Unless anybody has any swing trading questions. Oh, I see there's one. So very good question. You're scared of a gap up, and good, you should be. And yes, there's the best way to mitigate risk is size down. The second best way to mitigate risk is buy time and understand the pain that could come. and have that in your trade plan. Because if that's not in your trade plan, that's where you start to really get hurt. And so, you have to have the fear of a gap up or gap down, but also, that's part of trading, I mean, that is the double-edged sword of swing trading, is that, it it can be very profitable, or it can result in a very large loss, or it can just be a nice trade, but those are really the only few outcomes of a swing trade. And so that is the risk of it. And that is why a lot of us, and don't get me wrong, I do swing something most days, but that is why a lot of us focus more on the intraday day trade stuff, with the moves that the market makes every day. There's no reason to swing a lot of the time. Does it hurt when you see, you were in Tesla calls and you sold them and Tesla gaps up $20 or whatever? Like, of course that hurts, but it could have gapped down as well, So that's the thing you always have to think of. And I think it's why a lot of us, eh, we focus on day trading over swing trading just because it's safer. You have less risk inherently. I'm not saying that the people trading the SPX every day have less risk. They have the most risk in the market tenfold what a swing trade has. But swing trading is inherently more risky than smart, safe day trading and scalping. Okay, so no more questions. Oh, you got next week 195. So what was it at? Yeah, I probably like that. All-time high tomorrow. You think so, Lambos? I hope so. Somebody's asking me to pull up Netflix. Yeah, we'll do that. We're gonna talk about SPY real quick. Pushing back to those highs, huh? Um, we're gonna talk about SPY real quick. Need it. Oh, that's what I like. I need a gap up out of Apple. So we're gonna talk about SPY really quick and the price action of SPY the last couple days and how you could have potentially traded it. I do, as always, every time. Oh, did they really? That's great news. I need that thing to open at like 240. So when we discuss price action, it's difficult because you aren't seeing the candles print. We only get to see the printed candles, which obviously makes our decision making easier. Watching candles form is where a lot of people get stressed out watching price action. Maybe they get scared out of a good trade or whatever it is. And so, when we're doing this kind of thing, we just have to acknowledge that we're hindsight trading. So I'm going to say things. I'm going to, how we do this, well, you guys will see in a second, but how we do it, we kind of go candle by candle for a couple of days. And I tell you, this is what I would have done here. Best case scenario, this is what I would have done here, or worst case, we'll see, and why I would make that decision. And so, we're going to go through SPY, like I said, a couple days. Hopefully it's going to take us about, I don't know, 10 minutes or something. And then maybe we can get to some charts at the end. But first day, we're going to talk about with SPY. Obviously, nice big grind up day. And so how I like to do these is I just kind of zoom in on the charts and we basically just read candle by candle through the days and what we would be looking for. Take note, I'll show you what I would do for any like pre-market preparation stuff. And then we kind of just start, working through the day. So on this day, first thing that I would have taken note of was going to obviously be kind of a push off of this high, come down, trend line, break above it, retest, move above our 599. It's now moved our VWAP over our hourly 20. All EMAs pointing upwards, running towards that 600. This is all happening in the pre-market. So we can kind of start to say, okay, 600's our level to trade today, and 599 is going to be about where we expect, some downside from there, but we're basically looking long on this price action into the open. Doesn't mean I'm going to buy the opening candle, but I might attempt, depending on what everything else is doing, we might attempt to dip buy to that 600 if we get it early. And so, well, we get it on the first candle. I wouldn't have caught this, if I'm honest with you. I'll tell you that much. That was probably too fast for me to want to dive in there. Reasonable enough entry. However, now we've pushed up. No reason to be chasing calls up here. First thing I'm going to look for is going to be another dip down to this, basically 638 VWAP area. And again, when we're talking price action, I'm only talking about the things that, I watch throughout the day. Maybe you watch something else, but this is how I would view it. So, well, we knifed straight down to it, gave us no entry whatsoever. However, we know that 5.99 hourly 20 down here, this is our line in the sand. So we don't per se view it as a range, but we say this is where we want to buy the dip. Did you sneak your way into this candle? Maybe, maybe not. If you did, congratulations, but we're looking to be cautious dip buyers here. What I would want to see is the market to sell down, consolidate above these for a little bit, and make, show me some buying, something like that. And that's where I'm going to take my entry. So sell below it, rip above it. I'm giving no entry. Now, these two wicks, either one of these to me, a very reasonable entry. We're below the 20 and the 50 SMA and below VWAP, obviously. Those are our targets. So when we've broken back into here, we're looking to buy the dip on one of these two candles. We know where our stop is. It's below 5.99. I mean, if we're selling below 5.99, we get out of that trade. So we have approximately 50 cents of risk on the trade. Depends where you enter, I'm not going to say we bottom tick, but that hourly 20 would likely be my entry. So hourly 20 entry, stop below 5.99, 40 cents or so, ultimately targeting basically 601 VWAP area, giving us just shy of a buck move to the upside. Perfectly happy with the scalp for that. If you don't get either of these entries, then, I'm not going to tell you to chase up here. I'm not going to chase up here. I'm sure there's a lot of people that would feel comfortable buying here. Even though it's the top of the big green candle, stops under 600, not a trade that I'd be interested in taking. However, at this point, we've now identified something that I like to tell people to always take note of. I'm gonna put this on here because it's the high and the low. And I'm gonna change the color of it just so this is the first hourly candle of the day, has printed. So we know this is the range for today. We failed to break out up. We've now failed to break out down. I am looking for a break above the top of this range. If I want to be getting long up here, I'm looking for a break above the top of this range. Because the buying's so strong, probably not a ton of interest in shorting a double top, but you have to see how the market moves. Ooh, slowly getting more and more interest, but doesn't give it to me. So pull down to our support. Obviously, if you were a dip buyer, you could be a dip buyer here. Not for me. Push right up to our levels, fail the range. At this point, though, I am not short, but I am looking for a break above and a pullback to buy. And maybe I get stopped out. Oh man, and right about here, I'm wishing I was short. So here's our breakout. Ideally, we buy one of these candles on this wick back down, on this retest. We know this is our entry. Stop, break back into that range. Again, you're looking at about 40 cents worth of risk. I'm personally not going to use a hard stop. Obviously, because there's a chance you get wicked out, but we know our risk here. Then ultimate target 602.33, obviously 602 in the way as well. Always pay attention to those whole numbers. Hopefully we got one of these dip buys, even held these tops. Maybe we did, maybe we didn't, then honestly, I'm going to be all out here. For me, if you catch that kind of a move, I'm always going to be all out. If you were still in, obviously next target to trim. At this point, I'm sitting on hands, and everybody should sit on hands after a move like this. Now we need to look for a couple things to happen. Breaks and retests of 602.87 for more upside. Dips down to 602.33 if we think a range is forming, looking for continued move upside, or breaks and retests of 602.33 for shorts. We can have a lot of little options anytime we come to one of these zones. So then we get our break and retest. Can't lie, I don't love either of those candles enough to take an entry. And now we start pulling down to our 602.33 and holding it. I'm probably a dip buyer somewhere along here. I would likely this one the most. We're pulling back to an EMA. We're pulling back to a level. We're building a nice little consolidation, holding the lows of it. Stops are going to be below this EMA. Since we're getting a little later in the day, you're probably happy with the scalp to here, but you get a nice entry for the scalp to there with the tight stop. Maybe you catch a breakout. Maybe you get stopped out. Again, you get your scalp. Maybe you buy this dip down to the EMA, ultimately get your nice little breakout there for another good little scalp. If I was in this trade, if I bought this dip or this dip and held through that, I'm going to be out here. In price action, you always look to the left. Where do I trim? you trim at previous highs. So you catch yourself a nice little buck move up. I mean, this is one of those ones where you're lucky you likely saw no red. Not always going to be like that. Catch yourself a little buck move up. I'm likely getting stopped out on that wick back down. I'd be looking for maybe double top, maybe a wedge top to form. And then at this point, I'm sitting on hands. I mean, I know we got all EMAs. I want to see some consolidation, before we move more up. Well, likely break, pullback, retest. This is your entry. Stops below this level. Have to point out you got an hour left in the day. If this breaks, they're clobbering you. You can hope that you get a nice tight stop here below the CMA, below this level. End of day like that, you're likely gonna get blown out if that drops down, but you got the dip buy. Again, goes right to a level. Just lucking out. I'd be all out there, obviously, end of day. But then going into end of day, depending on what's going on the market, I would either be looking for a dip to the 20 EMA to buy, or if we break below it, sneaking my way in there on a short. Well, there's your dip to buy, apparently. Right back to our level. Could make the argument for the double bottom. Can't lie, I think I hit, oh no, I hit IWM on this day. I hit a similar trade to this. But nice pullback to your level. Nice little entry there. Yes, so really great question. How do you trail the stops? How I like to trail stops is when you get the breakout, use the bottom of these previous breakout candles. I've talked about that in a previous class. If this candle breaks up and pushes, you move your stop to the low of it. This candle breaks out and pushes, stop to the low of it. Anytime, I will always keep a tight stop if I'm planning on it being a scalp, but my rule is if I trim, the stop moves up. That's always my rule. If you're trimming and you're happy enough with the profits, bump that stop up a little bit so you're giving back less profits. And so again, nice day, ripper there. Maybe you caught that end of day rip, maybe you didn't. And then into today. So off the open today, I should remove this. I remember this off the open today. I really wasn't interested in too much. We were kind of in this tight little range here. I didn't even hit anything early. SPY was not doing nothing. So on this day, like I said, I wasn't trading it much. I'm trying to see. And because there's nothing here telling me to take an entry, we sold, but not close enough to a level. Sellers are obviously in control. We're setting lower highs. I'm starting to feel a little cautious trying to buy these dips. Maybe you buy one of these dips for a nice little scalp to the upside. Again, targeting your level. But for me, I'm not seeing much in the way of entries. I guess the one thing I would be taking note of at this point of the day would likely be this trend. This trend right here developing. Yeah, probably take note of that trend. If I was quick on the draw, I would short that trend, obviously. Nice sell there. Oops. So I'd short that trend. If I would have seen that, I probably would have taken that short. I don't believe I took that short. Now I start to look for sells down to these lows, sells down to this hourly 20, sells down to our 604.60, looking for scalps off of those lows. We're seeing, low volatility, range trading so far. So we're going to assume breakdowns probably not going to hold. Breakouts probably not going to hold. We're looking for range trading. We're an hour and a half into the day. SPY's been in a, buck range or less for most of it. So we're looking to buy dips and we're looking to short rips. That's what price action is telling us to do. So really, either of these candles likely gave you a reasonable enough buy to be getting in down there at those lows. Looking for scalps up to EMAs, VWAPs levels. That's it. Not looking for a lot. Yeah, and again, I'm still going to be in dip buy mode personally down here off of this hourly 20, looking for scalps. Maybe you catch this move. It depends which of these candles you're scalping. Maybe you catch the nice bounce up, and then really any pushes back up here to these highs. I guess I can extend my trend line a little bit more. Really any of these pushes back up to these highs, up to this trend. I mean, I'd honestly probably be short right here. Trend is down. It is a nice strong push up into it. I don't know what was going on in the rest of the market, but I'd likely try a little bit of a short here. And then when nothing happened, I would likely be getting out of the short right around here just because the move was not working. So I'd be taking my $5 and moving on. Oh yeah, and then I'd be super sad because the breakdown came. Yeah, that seems about exactly how I'd trade that. And then again, I'm looking to be a dip buyer down here, 604.60, 604.95. I'd even like it more down here, looking for some, double bottom, higher low sort of setup. Um, Maybe that was the wick you buy. Probably not me. I would have missed that one. But still looking for that lower high double bottom setup. That one's close enough. Yeah, 5 cents. I probably would have snuck in there on that one. Again, just looking to buy these lows. That's all I'm looking for. And then scalps to the upside. EMAs, VWAP, your level up here. Again, maybe you want to be short here. Maybe you want to be short, maybe catch that short. Not me. With ranges after, bullish momentum lately, I'm looking to be long. Maybe I'd buy that dip. And then, I mean, you can make an argument for a short somewhere up here, 606. I don't like it above the, what had been those highs. You can make an argument for a short, but I wouldn't take it. Yeah, get consolidated. And then I'm still looking to be dip by mode, somewhere down here. Maybe even that 604.95, thinking that it's probably going to be a higher low. I'm looking for the scalp set 605.60. Oh yeah, this is, yeah, nice. I'm happy I said that. So I would have been long here for sure. I mean, not for sure, but I would have been long biased here. If I wasn't long here, and again, thankfully I wasn't trading because now I remember what's coming. If I wasn't long here, I was probably long here for sure. There's substantially more reason to be long at this double bottom. And then, I didn't know it and nobody else did. Fed speaker. So here's an example of a range low double bottom just absolutely blowing you out. So again, I always love to be honest, I mean, if I was long here, this wouldn't have even stopped me out because I'd still be looking for, double bottom-ish setup. This wouldn't have stopped me out and then I would have been blown out. So, I lucked out there, no doubt. And then sold us right back down to our levels. By this point, I was reading what the Fed was saying. We know this was Fed movement. And the scary stuff was early, the less scary stuff was later. So at this point, we've held the levels, we've bounced the levels. I'm going to look for a little bit of consolidation, try to buy a little bit of a pullback for a bounce. And so this is actually a trade that we did catch. We got the bounce up, and then this pullback is the one that we bought. Definitely some risk on it, obviously, because my stop's going to be way down here. I made that very clear, but bought the dip right here, and then ultimately caught a couple nice moves up. I was all out of the trade by, I think I was out of the trade here. Then I bought this wick back down, pushing up above opening range, above our level, above our EMA. Scary stuff overhead, but I was in dip buy mode for whatever reason. Chart kind of is telling you to buy. Buyers are telling you to buy. So then ultimately luck out, catch a little bit of the breakout, and then I was like all out of the trade around here, something like that. And then of course in today, we know what happened. I mean, we got that big old squeezer right into close. So that's what I would have been looking for. And it took 5 minutes longer than I wanted. But does everybody see what I'm doing there? Keep it nice and simple. Let the chart tell you what to do. We went over a nice trend day. We went over a nice range day. They're repeatable. Trend days will always work like that. Range days will always work like that. Plan on everything being a range day till it's not a range day anymore, and you will have a lot more success. Okay, so any questions there on the swing trading? Any questions there on price action, anything like that? If not, we got a few minutes and we can check out some charts, either as price action or maybe just some trade ideas, if anybody's got questions. Yeah, right on, Ricky. Thanks for being here. And no questions. I know somebody asked earlier for Netflix. I wonder if they could already be gone. Let's see what Apple's doing. First thing I see is something about an Apple nightmare. I'm just not going to read that. Do I ever use EMAs? Yep. So these on my chart right here. And yeah, we're gonna do Netflix. We'll do Target here in a second. So oh, you're in Zaves. I forgot Zaves has an alert. So generally, I won't talk about an alert, but because maybe Zaves sees something different than I do. But yeah, we can talk about Netflix. Zaves don't care if we have a difference of opinions. But for EMAs, This is the 20 EMA, this is the 50 EMA, and then this stair steppy one is actually the hourly 20 EMA, just on a shorter time frame. And so I have those pulled up every day. I care much more about VWAP and the hourly 20 than I care about this 20 or 50 right here. But those are the ones that I trade with. I mean, I used the 9 forever, and just here a few weeks ago, I took it off, and I'll tell you what, I have not missed it one time. Okay, so Netflix. Netflix is tricky. Yeah, I knew it was squeezing after hours too. So Netflix is tricky. The main things that I would be focusing on here, obviously, big old gap up. Here is our range. I like it. I like it here. The issue with it is your stop really needs to be about 1,000. So you need to be all right with that risk. However, when I look at this chart, this to me says it wants to push up more. Like, the closes on these candles, the strength in this candle. We had a nice consolidation after that earnings, breaking the consolidation to the upside. One attempt on it. Maybe the first breakout fails. Maybe. The one concern, we have this reducing volume on the breakout, but I think Netflix wants to, poke its head up a little bit more. It put up, as I recall, it put up some halfway decent earnings, subscribers oh yeah, beat pretty good. Subscribers up. It checked all the boxes for a good earnings report. So it could kind of be a leader on that way up. But I like it. For me, the issue that you deal with right here is there's no data up here. So what do I care about on the chart? That level right there, 1,000. Basically top of the range. To me, that is the level that you care about. You buy dips to 1,000, and if it breaks below it, you stop out. But I like this trade. And then nice to see it pushing in the after hours. We got big data in the morning, so but those things should if you're lucky enough for us to get an open somewhere up here, you guys should be sitting pretty on those things. QCOM, yeah, let's check it out. Oh, that one had like earnings too. Someone just asked me about this. Well, you got nothing. I mean, not anywhere that I have any interest in trading it where it sits right now. So when you're looking at a range, the middle of it is like the worst place that you can possibly think about entering trades. So really what I would be watching on this thing, I mean, it'd basically be that. I'd be interested in dip buying it at 156. I'd probably be interested in shorting it up here at 180. I have no interest in doing anything with it right here at 167. I mean, VLTR just has buy signals every day. I mean, but like, I mean, if you're saying did this tell us that this was going to happen? No, not at all. I mean, they showed up and they bought PLTR with force today. I mean, you love to see a nice gap after earnings, not too much selling, not too much buying, letting the market figure itself out for a couple of days. You never expect this 3 days after earnings. This was just PLTR being PLTR. That thing is just unstoppable this year. Do I use the upper and lower VWAP bands? I don't. So they're a standard deviation from the VWAP. I'm sure they're pretty dang effective. But if I look at standard deviations, I always use a Bollinger Band. That's what I prefer. So it's what I stick with. Thoughts on AVGO? I haven't looked at it for a little bit. Not a lot to think about here. Yeah, drag my trend out. It looks like it's trying to hold the breakout. Actually, don't hate it. Don't hate it here. Would have liked those dips, earlier this morning or whenever that was. Afternoon, probably. I don't hate the dip buy on this trend break. This is a very similar setup to that Amazon one. I'm not, of course, don't trade just because the chart looks the same. That doesn't work. But we have multiple tests on a trend. First breakout failed. Obviously, all breakouts failed on that night. But first breakout failed. We're getting another breakout. These dips down anywhere down here to, your 226, 225 area, likely worth at least a shot. But you stop on the close under the trend, you got some EMA support. You likely have some SMA support around here too. Oh yeah, you got the SMA support right at the trend. So I mean, I really like the dip by to the trend. But just some relatively tight stops below it. Because if it does start selling, I wouldn't be surprised to see it pull back a little bit more. But still, I expect this thing to go visit all-time highs sooner than later again. What do I think about AMD? Ah man, tough one. Tough one. Massive volume on that earnings day. I mean, still fighting this same downtrend. We get a breakout, retest, pull back to 111.69. I will, for the 100th time, try to catch the knife on AMD and see if it finally wants to break out. But as I've been saying for the better part of a year now, AMD suffers from something. Really, only one thing, great product, good sales, all of that is good, but they aren't NVIDIA, and until they start chipping away at NVIDIA's market share, it's hard to be overly bullish on them. I will say I'm personally not like short. Wow, we are going to close under that weekly 200. I'd still be worried to be short down here. I won't say that I'm bullish on AMD, but I mean, you know, I won't say I'm bullish on AMD, but I'm not bearish on it here. I mean, I guess it's short off the trend. You're swinging short off the trend reject, which has worked time and time again. I get it. Maybe you get that pullback to 105, 108.80. But still just hard for me. I didn't ever read their earnings. Oh, they smoked EPS though. I didn't ever read their earnings, but I mean the buyers showed up in force the day after it. And so I'm not overly bearish on AMD down here personally. Okay, well, that is going to do it. Thank you so much, everybody. I appreciate you all for being here, and we will catch you tomorrow morning. Right on. Thank you all so much. I appreciate y'all for being here, and have a good night. We'll talk to you soon. Thank you. Yep. Thanks, everyone. We'll talk to you soon.